What's up, guys? This is Wade with Trade ATS, and I got another video for you, but this is going to be a little bit different than my normal educational videos. This is actually going to be a weekly projections video. We're actually going to be looking for master pattern setups that we think may be playing out this week. So these are all things potentially that we're looking to trade, and we want to share them with you. So if you like this video, you subscribe to the channel, we may do these every week, but we're just going to go ahead and throw it out there and see how it's responded to and how much you guys like it. So let's get right into it. So the first currency pair we're looking at is pound franc. This one is starting to set up pretty nicely. It is set up nicely right now. We're going to start over here on the weekly chart. If you see these blue wicks, you could see how they held minor framework on our software over here. That was a clue in itself back when that was happening, that the market was likely to see more downward pressure. Whenever you get that settling action, those are always great clues. You could see we had it before here on this minor framework box. We'll also call this pattern walking down the ladder. In our classes, we always refer to it as that type of price action. So that's what eventually led to this break. But now, obviously, it's broken short. This thing is moving down. It's below a major framework line, as you can see right here. So that shows that your much higher time frames, the monthly, and even people that trade on a higher time frame than the monthly scale, are holding this market short. But what creates an opportunity right now is the fact that this is fully short. We got full-blown short momentum going on right now. But if you see over here on our 30-minute chart, we are overvalued. So you have the stable, the institutional stable traders pushing this market down, but on the short time frame, we could see that it is overvalued. So what happens in a situation like this? Well, I want to tell you one more piece of information, because in our ATS war room where we do our research and everything, we also look at market sentiment. We're not just going to go just purely off of the directional bias, although the candle does say a lot. We're also looking at sentiment. Right now, according to our research, 88% of retail traders are net long right now. And we know that the majority usually are wrong, right? So right now, the fact that we're overvalued according to this value line right here, the fact that we have all the significant time frames putting downward pressure on the market, that's what creates an opportunity and the informational advantage we have to know that 88% of retail traders are net long. It creates a significant opportunity. So how would we be looking at a situation like this? Well, how we're looking at it is that you want to accumulate your positions up in this neighborhood. And I'm not telling you what to do. I'm not going to tell you when to get in, when to get out. What I'm telling you is here's food for thought for a trading idea in a situation like this. Right now, you're in the zone. The zone is basically above expansion. So in this area up here, you'd be looking to accumulate a position that is comfortable to you based off of your account size, based off your money management. That's your business. But basically, you'd be looking to accumulate a position, and at very minimum, we would want to see it come back to value. We'd want to see it come back to this center of gravity right here. Okay, once it does that, that's your minimum upside. Okay, so when you're starting to figure out what your risk is going to be, if you don't know where you want to put it, just based on the top of this high right here, you can start with a minimum 1-to-1 ratio. So you could measure down to this price level right here, which is about 49.50 pips, and you can measure up 50 pips if you want a simple 1-to-1. If you want to get a little more advanced, you could go back and look at the framework that is already held. If you see, we had these major expansion boxes right here, major framework, they came up and held this level right here on this spike up, and now we're back at that level. So it has shown that it's respected that level now twice. So what I'd like to see, it very well may come back up to this level, but I really don't want to see too much price action above this high. At that point, we may be headed for a much bigger breath. So at that point, if it gets much above there, might want to take the trade out of the market and call it quits for the moment. And I'm not saying you don't get back in, but you could maybe get back in up at this liquidity line up here. But at that point, you'd want to look at the weekly chart, the daily charts, and see what's happening. So that's kind of your worst case scenario is up here. Getting into the trade is going to be somewhere in this neighborhood. Getting back to value, that is your minimum upside. What you want to do if things really work out well is when the trade gets back to value right here, it starts to settle under that, you want to aim for the swing low of the master pattern cycle. Where's the most recent master pattern cycle? Well, it's right here on this red box. We have a little swing high out of this, a swing low, a swing high to the top up through this liquidity line levels right here. And we're going to be looking to attack the swing low, which is basically this tip right here. And you can see that the software already put in liquidity line levels for us too. So we'd want to see us get through value and then off down into liquidity. And at that point, that's pretty much considered a home run. But then even so, it could get a boost off that liquidity and then become a pretty awesome trade. So this is one of the setups we're looking at. Let's go to the next one. Next pair we're looking at is CAD yen. So let's look at what's happening on the weekly chart right here. You can see that we've just been steaming upward. And this is the same situation. Right now, 86% roughly of retail traders are net short. That means they are shorting into this momentum. They're likely going to be wrong. So what we're preparing for is that the momentum is going to continue up. It's going to hit their stops because they're shorting this. And then when it hits their stops, that's what the smart money is going to use to exit their positions up in this neighborhood up here. Now, is that guaranteed to work out? No, it's not guaranteed to work out, but it is a battle plan. And it is a pretty good time-tested battle plan trading against the retail sentiment. So for entry, what would we be looking at to do over here? Well, if we see right now, you can see that we have red boxes stacking above. That shows institutional momentum is holding to the long side. So that is definitely a good sign. It shows a strong market. However, we are still trying to get good trade placement. And right now is not terrible because we're looking to ultimately come up through the active high, which is right here. But you'll notice that we're not quite below the last major framework. So your entry zone, I'm not saying that you couldn't enter here. And again, I'm not telling you what to do. This is not to give you financial advice or anything like that. This is just to talk about potential trade setup and get you thinking about how to use this type of methodology. So what you could do is you can see if we do get a break from right here, from this box, and see if we don't land somewhere in between this major framework right here at about 106.417 down to about 106.032. If we get in this neighborhood, we're going to start picking up liquidity right here. That's going to be a great place to accumulate for the bigger institutions and see if we don't get a turnaround there. What I'd be looking at for risk, though, if you're going to accumulate from where we're at right here to right here, then I would, just my opinion, I really wouldn't want to go much below this expansion line right here. So if price does, we always want to come up with a for better and a for worse type approach to every single trading idea. You want to look at this as your first accumulation zone. If we get much past this level down here, sometimes it could come down and tap and range, but if we get much more down past that, then you might want to take the positions out of the market and just wait it out a little bit longer. Because in that case, you could end up getting entry between these levels right here and this one down here. So you wouldn't want to over accumulate too much without a little more confirmation that it's going in your favor and then ride these positions all the way down to here. You don't want to do that. So this would be kind of phase one accumulation down in here, and then phase two from here down to here. And at that point, you're just going to kind of have to see how the price action is behaving. But this is, again, based on the fact that 86% of your fellow retail traders are net short against this monster of momentum. They're probably going to be wrong. So as long as that sentiment holds and doesn't go down closer to the 50-50 range, then this is highly likely to return up to active highs, up through this liquidity line level, and put you into profit. You just need to be careful. Again, nothing is for sure. You always need to manage risk, but this should work out. Also, I do want to talk about that sometimes when there's a lot of momentum, you really don't get too much price action below value lines. So if we do keep holding this value line right here, similar to like we pulled back right here, came down to this line right here, and then kept going, that's also a sign of a market that has a lot of institutional momentum. And if we react off of this value line right here, this expansion level, you also could, if you want to, I'm not telling you what to do, but you could put a trade in right there and ride the momentum up if it takes off right to this high. But in that case, you would want to adjust your position sizing and your risk management to the point that you would be wrong if you came back through this level. Because the trade, you always have to have your point of no return. This is the point on the chart based off of all the market framework that you've either mapped out manually, or if you're using our software, it's going to do it for you. But you want to have your point of no return where you deem that this trading idea completely falls apart at this level. And so if you're going to trade a bounce off of this line with this momentum against the retail traders that are 86% net short, if you're going to trade this bounce, make sure you make this level your risk management. Maybe stop down around this neighborhood right here. You want to keep it real tight because you're basically looking for an immediate turn to the upside. So keep that in mind. There's different scenarios that could work out, but the facts are 86% are net short, and we're going to try to figure out how the market makers, the smart money, are going to take money from their stop losses, use that projected liquidity to fill their trades. Let's go to the next one. Next on the list is Euro franc. So starting with the weekly, we could see that since we broke out of this minor framework box, we had that volatility signal on this candle. So right then we knew volatility was coming into this market weeks back, but obviously we're not talking about the setups from then. But the point I do want to make is that momentum has continued to the short side because the higher time frames got called in right at that moment, and it's still playing out to the downside. So you don't want to trade against that momentum. But what is the actual trade setup? Well, right now, what's interesting to look at, this is very similar to pound franc. Right now, we are overvalued right here on the last expansion level. Right here, last major framework. You can see we had this big spike up. This sucked in a lot of retail traders to start buying this market thinking it's a reversal. And it very well may be, but more times than not, they're going to be wrong because they're trading against this momentum that is established over here. This is not going to turn typically that easy. So keep that in mind. Another thing, our informational advantage from our ATS War Room, from our research right now, retail traders are roughly 90% net long. And remember, when we take these measurements, these traders are usually going to be classified as trading anything from a 5-minute chart up to about a daily time frame. That's usually the highest. So basically all of your short-term and day traders are net long right now. So as this market starts to unwind, because when they're all long, there's no one else to jump in unless the bigger players want to continue to drive the market. And there's some major fundamental news announcement that's pushing the market and getting the big players to change their sentiment. Then this little blip right here that's got these retail traders sucked in is probably going to unwind. There's a high likelihood. So, and right now, the forecasted liquidity, remember the higher time frame players are all about where is the liquidity, especially in FX. All that liquidity is right down here as their belief in this long trade, this long market starts to break. So as it breaks, it's going to go right back to the point of origin, which is value. That's where it was established before. You'll see it break all the way down to here. I don't know how long that'll take. And again, it doesn't have to happen. There's just a high likelihood it will happen. So they're going to break all the way down to here, and then you'll be off to the races. So that is a trading idea. For starting the trade, accumulating, we do have some framework right here. We have this minor framework, these two boxes right here. We can see that we already had a reaction. So market is starting to respect this level right here, had this push up. So I would say anywhere up in this range is great to start accumulating. Where you wouldn't want to let it go past, again, just my opinion, but I really wouldn't want to accumulate too much past the high right here. It very well may come up and spike up through there. But at that case, if it were me, I would probably be looking to get out of my positions and see if it's not a full-blown reversal. Again, there's a high likelihood we're going to see this value line again, a very high likelihood. But this pump may not be over. They may want to drive it up and pick up the liquidity up here. But here's the thing. If you accumulate positions and you're wrong even a few times, as long as the retail sentiment stays 90% long, or up, way over 50%, there's a really high chance that this market's going to continue to drive down. And so this is going to be our first minimum profit target based off of this expansion level right here, based on that whole scenario playing out. So keep in mind, if you do lose a little bit and it gets higher, the higher it gets, and as long as the narrative stays intact, it's all coming back to here. So keep that in mind. Make sure you don't risk too much, where you can't give yourself a little bit of breathing room. You can always add to the position, again, as long as the idea stays intact. Let's go to the last one. Our last pair for the week is pound CAD. Going over the weekly chart, everything since we broke out of this major expansion range right here has been just plowing short like crazy. And again, the same situation has caused retail traders to keep trying to buy the bottom. As of right now, retail traders are roughly 90% net long on pound CAD. Again, another situation they're highly likely to lose. This one isn't as great of setup as the euro franc or the pound franc. You don't have that full extension. However, we are overvalued. If you reference these value levels right here, we have major framework. That is a trading idea in itself, is getting back to that level. So right here, you can see there's about a 35, 36 pip upside to the very minimum profit target. But again, you want to always start with a minimum of a 1-to-1 risk-reward ratio. So measure up about 36 pips and see where that lands you in associated with the current framework. You see we do have a liquidity line roughly at that level. So there is a decent chance that this could come up through expansion and come up in this neighborhood. That's where probably the best accumulation is going to happen on this. I'm not saying that it can't just immediately go, because it looks like we could be settling right now. That's yet to tell. But probably the best accumulation is going to be up through this level right here and up in this neighborhood if that does happen. If not, you're above value right here. And ultimately, the major fulfillment of this idea is coming back down to the very low of the trend. So this is the lowest expansion line in this overall grouping of value levels. So I would reference this one as well. First this one for your minimum, and then you also want to get down through this one as well. If you do accumulate up in this neighborhood and we do get through this level, again, that's your minimum upside. Once the price gets through there and starts rejecting the bottom of that level, then that's definitely a good sign where you can go ahead and protect your profits down to that level. Because at that point, you're looking for this thing to pretty much make immediate progress and build some speed through these liquidity line levels. That would be an ideal situation. Again, you'll have to see how it plays out. This is just kind of an idea of how it may work out, but that's how we would approach that, or approach this situation in our offices. So that's pretty much what's set up. These are the ones we're looking at. We're going to be going over these again with our community in our live webinar, which is now Thursdays at 10 a.m. Pacific Standard Time. So we'll revisit all these and see what's going on. But as of right now, we're going to be putting this on YouTube for the first time. So hopefully you guys like what I did here. If you do like it, make sure to like the video. Make sure that you subscribe to our channel. And if we get enough good interaction on the video and everyone likes it, I could maybe possibly do these every week if you guys find enough value, and it's all good. So thank you so much for watching, and we'll see you on the next video.